IFRS 17 marks the most significant overhaul of insurance accounting standards in decades, ushering in a new era for the industry. This comprehensive update is designed to address long-standing inconsistencies and complexities that have challenged insurers, investors, and regulators for years. By introducing a unified, principle-based model for all insurance contracts, IFRS 17 creates a consistent global framework. This means companies across different countries and markets will now speak the same financial language, making cross-border comparisons more meaningful. Previously, insurance accounting varied widely from one region to another, making it difficult for investors and analysts to accurately compare the financial health and performance of companies. This lack of comparability often led to confusion and uncertainty in the market. Now, any entity issuing insurance contracts, whether a traditional insurer, a global reinsurer, or even a manufacturer offering extended warranties, must follow the same set of rules, ensuring a level playing field for all. The core change is that profit is recognized gradually over the period services are provided, rather than all at once up front. This approach aligns insurance accounting with practices in other industries, providing a clearer picture of ongoing performance. This shift offers a more accurate and transparent view of profitability, helping to prevent premature earnings recognition and ensuring that reported results truly reflect the underlying business activity. IFRS 17 impacts not just finance teams but also actuarial, IT, and product design departments. Organizations must invest heavily in upgrading systems, improving data quality, and retraining staff to meet the new requirements. The ultimate goal is to enhance the quality, transparency, and comparability of financial information, building greater trust and confidence in the global insurance industry for all stakeholders. IFRS 17 isn't just an accounting update, it's a catalyst for industry-wide transformation, setting the stage for a more robust, transparent, and globally connected insurance sector. The IFRS 4, the old standard, allowed insurers to use local accounting practices, resulting in a confusing patchwork of policies. This made it nearly impossible for investors to compare insurers or understand their true profitability. Profits were often recognized upfront, distorting the long-term nature of insurance. IFRS 17 fixes this by spreading profit recognition over the policy's life and requiring up-to-date assumptions for liabilities. The new standard also introduces detailed disclosures, giving stakeholders unprecedented insight into risks and performance. With these changes, financial statements now offer a clearer, more reliable picture of an insurer's economic reality. The result, a more informed, efficient market for all. The IFRS 17 marks a significant turning point in insurance accounting, replacing a patchwork of fragmented standards that often led to confusion and inconsistency across the industry. Now, a single, consistent model applies to all insurance contracts regardless of type or geography, creating a unified approach that enhances comparability and reliability. At the heart of this new standard is the Contractual Service Margin, or CSM, a groundbreaking innovation that defers the recognition of expected profit, releasing it gradually as insurance coverage is provided over time. This approach prevents the front-loading of profits, ensuring that revenue is recognized in line with the actual delivery of insurance services and better reflects the true economics of the business. Insurers are now required to clearly separate insurance results from investment results, providing stakeholders with a transparent view of core business performance and investment activities. Contracts must be grouped by similar risk and profitability profiles, ensuring that losses are recognized immediately, while profits are deferred and released prudently over time. Meeting these requirements demands sophisticated data systems and advanced actuarial modeling, representing a major operational and technological challenge for insurers worldwide. The end result is a more transparent, disciplined, and robust approach to insurance accounting, fostering greater trust among investors, regulators, and policyholders. With IFRS 17, the insurance industry is now held to a higher standard of accuracy, comparability, and accountability than ever before. The General Measurement Model, or GMM, is the default method for valuing most insurance contracts under IFRS 17, the new global accounting standard for insurance. This model is designed to bring greater accuracy and comparability to financial statements across the insurance industry. It's built on 4 essential building blocks: future cash flows, the time value of money, risk adjustment, and the contractual service margin, or CSM. Each of these components plays a crucial role in capturing the full financial picture of an insurance contract. This approach ensures that insurance liabilities reflect current economic realities, as well as the uncertainty and risks associated with future claims and obligations. For short-term contracts, the premium allocation approach, or PAA, offers a more straightforward and practical way to measure insurance liabilities, making reporting easier for simpler products. Meanwhile, the variable fee approach, or VFA, is specifically designed for contracts with direct participation features, allowing for a tailored measurement that reflects the unique nature of these products. These models aim to reduce unnecessary complexity wherever possible, but always maintain a high standard of consistency and transparency in financial reporting. The result is a robust framework that faithfully represents the true economics of insurance contracts, providing a more accurate financial foundation. Insurers and stakeholders now benefit from a clearer, more actionable view of risk, profitability, and performance, supporting better decision-making. Ultimately, IFRS 17 brings much-needed discipline, clarity, and global consistency to every type of insurance contract, transforming how the industry reports and understands its financial health. IFRS 17 brings unprecedented comparability to insurance reporting worldwide. Investors can now assess insurers across borders using the same principles, improving market discipline and confidence. The standard's complexity, however, has required massive upgrades to IT, data, and actuarial systems. Implementation costs have been high, and cross-functional collaboration is now essential. Actuaries, accountants, and IT professionals must work together to meet the standard's demands. The journey has been challenging, but the payoff is a more transparent, reliable insurance sector. The industry is better equipped to inform management decisions and investor choices. IFRS 17 sets a new benchmark for financial reporting in insurance. IFRS 17's rollout began in 2017, with full adoption required from 2023. Over 100 countries now use the standard, creating global consistency, except for the US, which still uses its own rules. This shift has transformed insurance reporting, replacing old metrics with new ones like insurance revenue and service result. Management and investors are adapting to this new financial language, despite some initial market volatility. Even US insurers feel the impact as global investors compare them to IFRS 17 peers. The trend toward transparency is reshaping the industry, driving convergence and better global comparisons. IFRS 17 is redefining how insurance companies are evaluated worldwide. With IFRS 17 now in effect, insurers are moving from compliance to optimization. Companies are leveraging new data and insights to inform strategy, product design, and capital allocation. Integrating IFRS 17 metrics into performance management drives better business outcomes. Clear communication with stakeholders is crucial, as financial statements look very different from the past. Ongoing education and transparent reporting will help manage expectations and build confidence. The standard will continue to evolve, requiring insurers to stay agile and engaged with industry developments. Embracing IFRS 17 fully means unlocking its potential for greater transparency, efficiency, and resilience.